My name is Robin Da Vinci, and I am a person who has worked with all these IRS forms for almost 40 years. So I understand when someone gets nervous or confused or wants to scream and run away when they're given one of these forms to fill out for their employment. So I decided that with the new W-4 for 2022, I would go over it a little bit slowly with you and maybe answer some of your questions. So obviously the first part is your first name, initial, and last name and social security number, and then your address. And please be precise and clear when you give this to your HR person or the owner of the company for which you work so that they can clearly enter it into payroll. A lot of the biggest mistakes that come with payroll are just poorly written information. For the most part, unless you're rural, the IRS doesn't like PO boxes for checks and stuff. They really want to know where you are. And I know some people shudder when they hear that, but it's really important to have the correct address. And during the course of the year, if you move, change your location in any way, to give your HR people the new address so they can update you in the system. There is a lot more reporting than you think there is. And sometimes if you don't have the right address, you can't get local help if you need it because you're not registered in the right district. So there's not just the IRS that is notified for things with your information, but it's state and local governments as well. So if you really do want to, get help or be in the system, please always make sure your information is updated. Do not move without telling your HR person so they can have that updated information. In the section 1, under section 1C, it asks you for your filing status. So it's interesting that they have single or married filing separately. Single is obvious. You're not married, you're filing a tax return all on your own, and your name is the only one on the tax return. That's what single unmarried is. But married filing separately, that means that you do have a spouse, but for tax reasons or for simplification, you are going to file separate tax returns. Often this happens, just as an example, if you were married and divorced and have children for which you're getting support, and your spouse had been married before with children that he's giving support to, or vice versa, whatever it is, that you file separate tax returns because you're going to want it to be treated separately until those children grow up and turn 18. A lot of times in divorces, and I know there are millions of you have gone through this, someone chooses to take the child as a deduction. Let's say you have 4 kids and you each decide to take 2, or you decide that the person gets all 4 deductions every other year. That's why you need to say if you're married filing separately. The next one is married filing jointly, which is the most common of everything that we do. A married couple files a joint tax return. And that means that everything you're doing is combined. Or a qualifying widow or widower. That means they give you sort of a special status if you were married and then you became a widow or a widower. So that would apply to you. And then the third one is head of household. And I'll give you this example because it was my mother. My mother was divorced with 3 children under the age of 18. She was considered head of household. That gives you a slightly larger standard deduction for being head of household. So if you are divorced with children, or single with children or dependents, you can file as head of household. That will give you a little bit of a tax advantage. Okay, so that's the section 1. That's pretty simple. Then we come to section 2, which is the one that makes the most of you crazy. And section 2 is one of those things now that what the government is looking for you to do is kind of take charge of your finances, sort of take charge of that paycheck. If I were to give you an example, I would say to you, The IRS doesn't want to give you a big refund, nor do they want you to have a big tax bill to them. What they're hoping that is if you fill out your W-4 correctly and you get the proper taxes withheld from your paycheck, you will not be owed anything back and you will not owe them a dime. Now, I consider it a victory if you get less than $1,000 back or you owe less than $1,000 to them. That is pretty close when you are calculating an entire year. So that really makes sense to me. And I really think, in my book, I would call that a zero victory if you either owe or get back less than $1,000. That means you've done a really good job planning your taxes. So in this category, what they're looking for you to say is, how many incomes do you have coming into the household? And on these incomes, who is it? So I'm going to kind of go over this with you. When it comes to two incomes, what kind of incomes are they? Are you both a W-2 wage earner? That means at the end of the time you work, at the end of the calendar year, you get a form that's a W-2. A W-2 is a summary of your work year. So let me put it this way. Your last pay stub of the year, that should actually have your year to date on it, and it should match up with the W-2 you receive. And that is a pretty clear indication that everything's correct. Now, during the course of the year, if you change jobs, let's say after 7 months you quit that job, you can ask for an interim W-2 so you can see what it looks like, see how much tax you've already paid in, and then when you start your new job, you can make an adjustment. Let me be clear. The W-4 form is giving you the opportunity to take home as much of your net pay as you can, or pay in as much taxes as you want. Before, it was kind of standard, well, quite a while ago, where you just started working. If you said you were single, they did this, and if you're married, they did this, and if you had kids, they did this, and you didn't get much say so. But now they're saying to you, how much income are you bringing into the household? Is your spouse making money? Are you making money? Are you taking too much out of your check? Go to Paycheck Calculator or to the IRS app and find out just how much tax you should be withholding between the two of you. That's what they're saying to do. So let's say you go to tax calculator and you make 80,000 and your spouse makes 60,000. So that's 140,000. So you go to the paychecks calculator and you put in 140,000. Then they're going to ask you really good questions. Do you have children? Do you own a home? Do you have a mortgage payment? How much is your property tax? And they will tell you estimated just about how much tax you need to withhold from your check. Both of you could be withholding too much. And then, oh, you say, yeah, but I get $6,000 back at the end of the year. Yeah, but you've probably been using credit cards to supplement your income because you were giving it to the government to hold for you for a year. So these paychecks calculators, these are the greatest tool for you to find out how much tax you owe. There are about, and I'm going to give you 5 categories of what you might be doing. You might have one W-2 in a household, you and your spouse, one of you works, one of you is home. So you have one W-2. You could have a household where both of you have a W-2. So you need to talk and get that calculated so you're not withholding too much or too little. You could have a W-2 worker and a independent contractor, who will get a 1099 at the end of the year. And I'm going to do a little video on that so I can explain the W-9 and the 1099. So you could have a W-2 and a 1099, or you could have two 1099s. So in other words, it's 2022 and you have to own up and take responsibility. You can't just close your eyes and put your hands over your face and say, I don't want to know how to do this. I'm just going to, if I owe at the end of the year, fine. And if they have to give me a bunch of money back, great. But what I'm saying to you is you can evaluate what you've paid in tax. And if your situation changes during the year, you can go in and create a new W-4 for your employer, and you can change the way you withhold your tax. I always suggest by June 30th of every calendar year that everybody looks at their pay stub for the end of that second quarter and look and see what they've paid in. go back to the paychecks calculator and see if it makes sense. And if it doesn't, change your withholdings. So on this W-4 form, um, they're telling you to use the worksheet. Now, those of you who are intimidated by this worksheet, I really can't help you. But if you go to the worksheet and just read it and fill it out with your specific information, it will help you if you have multiple jobs. If you have only 2 jobs total, you can check the box for the W-4 form. And, you just I if it's 2 people with, 2 W-2s, check that box. Step 3. Step 3 confuses people too because they go exemptions versus dependents. They're almost the same thing. Exemptions are to help you get the most out of your paycheck. Dependents are the things that are likely to show up on your tax return. If anybody, in the audience, and I'm sure millions of you have, you look at your front page and it lists your dependents and their social security numbers. This is where they decide whether your standard deduction or an itemized piece of paper will get you a better tax deduction and relief. So here they're saying to you, if your total income will be 200,000 or less, or $400,000 or less with 2 incomes married filing jointly, multiply the qualifying children by $2,000. Now it says under 17, not 17 and under. That's a big difference. That means if you have a child 16 or younger, if you have 4 of them, you multiply it by 4, that's $8,000 you put in that box. If there's 2 of them, it's $4,000, but it's not 17 and under, it's under 17. So 16 years old and lower. Then you do that. Then it says multiply other dependents by 500. So let's say you have 2 children and a spouse. You're not going to claim yourself. A lot of times people don't claim themselves because a little bit more withholding comes out. It is better. If you want the maximum, let's say you're married and there's 4 of you. You claim married 4, you will pay the least amount of tax. If you do married 3, that means you're not taking yourself as a deduction from your paycheck. Okay? But on your tax return, you will take 4. Okay? So it's very interesting. So on your exemptions, let's go back to exemptions and then your other dependents. So exemptions are anybody 16 and under. So however many of those are, and then the number of dependents by 500. So if you're married and you have a spouse and 2 children, you can multiply it by 4 and put $2,000 there, or multiply it by 3, put 1,500 there. It depends. This does determine a little bit of your tax on your tax return, and it gives, it'll say on your paycheck, married to. So that's what that means. So then you add those 2 together. Box 4 is optional. Box 4 is for somebody who has other income other than salaries, like you have dividend income, interest income, that you make investment income, and you want to withhold tax from those because those are all taxable. I do tax returns. When I have all those forms in front of me, there's, Schedule A, Schedule B, Schedule C, D, E, it goes on. But Schedule B is about dividends and interest income, etc. If you think you're going to have a lot of income from those avenues, you would want to withhold some extra tax for that, unless you take the income, the dividend income, and have tax withheld at that point before you get it. So you might get a gross dividend. Okay. Now, millions of you say it doesn't matter to me. I don't get dividends or anything. But for those of you who get dividends, there's the box that said gross distribution. And then it will say to you, it'll say dividends or whatever. It'll say taxable amount. And if it's the same as the gross, and then it'll say federal withheld or state withheld, and it usually says 0 because people don't withhold money. But you can withhold from those dividends, or you can, on your paycheck, add $250 and say, please take married with 3 dependents plus $250 every pay period in order to cover other income you may make. So now you are educated on this about that. So if someone says to you, do you pay anything extra in? What they're saying is, did you take your marital status plus your exemptions, name your dependents, and then did you say plus a flat rate of 200 because I want to cover my other income? That's what that one's about. You can always ask for extra withholding. Like, let's say on June 30th, you and your spouse go through and say, we are making a lot of money right now, and I don't think we withheld enough tax. You can go in, fill out a W-4 and say, could you please withhold additional taxes? You can also determine, well, we have a big house payment, a lot of interest, property tax. Now it's going to be capped. The Schedule A is totally different since 2017 laws were passed. So your Schedule A, if you're a person that always filed a Schedule A, now I'm going to go back for just a second to say the Form 1040 is your tax return. Then there's a Schedule A, which usually lists your property tax, your interest income, donations. It used to be 41 items, and then through the course of the last 35 years, it's been bastardized down to about 12. And so you don't have as much to deduct on your Schedule A, and there's been some caps put on it, and you can no longer take unreimbursed business expenses. All those kind of things have been removed. So in effect, someone might boast that they didn't raise taxes, but they took away our deductions. So whenever deductions are removed, taxes go up. I know there was a huge outburst from people who in 2018 ended up owing money when they'd never owed money in their life. And that's because deductions were removed from your tax return. So Schedule A is where you put deductions. So in this optional section of 4, they are saying, if you know any reason why your deductions might be higher than the standard deduction, you can tell us right here. So that is what this W-4 form is about. It looks complicated. It's not that complicated. Most of you are W-2 employees. If you are a 1099 independent contractor and you have to fill out a W-9 and that makes you nervous, I'm going to do a video on that as well. I want you to understand these things, and I want you to take responsibility for them. There is no way on this earth that we can we can look away from this anymore. If you're a W-2 employee and you're paying in too much tax and you get this huge refund at the end of the year after you file taxes, you shouldn't be doing that. You should be getting the most out of your paycheck every time you go to work. Every time you're paid, you should get the maximum you can under the guidelines of the tax requirements. You should never pay more than you owe. And for you to let the government have your money all year and then wait for them to give it back, that's a mistake that I am encouraging you not to make. Please don't make that error. So I hope this helped. I will do a W-9 and a 1099 form. Thank you so much for listening. I'll be back.